For the first time in Watch This Wednesday history, I started doing my analysis as I usually do for these companies, and so much news came out that I actually decided to pivot and do an analysis of a different company. We had Berkshire Hathaway acquire shares of Dominion Energy, we had Uber acquire Postmates, we had Sunrun acquire Vivint, don't really know how to say that one, but I think there's a phrase out there that says, when life gives you lemons, you do an analysis of Lululemonade. Wait, no, that's not it. Anyway, today we're going to be taking a look at Lululemon. Hey everyone, and thanks for joining me today. My name is Matt, and if you're new here, what I do each week is I take a look at different stocks, do an analysis about the company, direction they're headed in, and decide if it's something worth adding to my portfolio that I have on E-Trade using paper trading. And the company we'll be taking a look at today is Lululemon. Now, with Lululemon, they have actually a pretty interesting background story, and that's what I wanted to start talking about because it'll be relevant towards the analysis that we do later. And Chip Wilson started the company many years ago after selling a skateboard apparel company where he made long shorts because it covered skateboarders' knees, and that's how he got his start in the fashion industry, as well as his mom was a seamstress, so he already knew how to sew. And he has this thing called the power of three, where if he hears about something 3 times, then he realizes that it's something that has traction and it'll act quickly on it. And so he heard about yoga in 3 different scenarios and thought this could be the next big thing. So he started attending yoga classes and saw that those classes were growing substantially each week. And so he knew that he found the right area, but wasn't sure how to go about it. And at the time that Lululemon started, people were just wearing the worst clothes they had to go work out and exercise in. And he wanted something that somebody can wear directly from work to the gym without changing, be appropriate for both settings, and comfortable for both settings. So he started off with the women's apparel, and it's actually a funny story with the name Lululemon. Apparently, the letter L doesn't exist in the Japanese language, and so he knew that it would be harder for there to be knockoffs created on Lululemon if he included L's in the name of his company. So that's where the name came from. They started selling these clothes in yoga studios. It's like a boutique shop. And that's actually going to have some relevance later on in this episode, but you can say Chip Wilson was very strategic with the way he brought Lululemon to the market and was able to get the attention of the media very quickly. His business also operates as a direct-to-consumer platform, so there's no middleman or there's no factory than Lululemon than their stores. It goes right from where they design and create the products to the stores themselves. And so they minimize those outlets where people can receive Lululemon products, which again is another way for them to help minimize any kind of counterfeits or knockoff products. If you are interested in learning more about Lululemon's history and how they got started, there's a podcast called How I Built This, and they interviewed Chip Wilson on it. It's a really interesting podcast, but we don't have time to cover all the details, so that's just a brief overview on how Lululemon got started. So for a while, Lululemon's main business was selling workout apparel to women. And they recently transitioned into men's apparel as well, so they now offer both kinds of apparel, as well as they had a YouTube series online where people can watch classes for free and just quick little workout videos from home. Usually it's like a 20-minute full body home workout, and so it was a way to get people engaged in Lululemon. And that's something that they've done very well so far, is creating that brand recognition or that brand awareness. So it has a very large following, and people that like Lululemon love Lululemon. Now, the reason though why I ultimately decided to do a review of Lululemon today is because they recently acquired Mirror. If you're not familiar with Mirror, it's essentially like something you hang on your wall. It's a workout instruction thing, so you just follow along with it. And it doesn't take up any space in your house or anything like that. Just you can watch full body workouts, you can use weights and whatnot. So it makes it really easy for people to work out, again, without taking up space and requiring minimal equipment. And the reason why I really like this is because it creates a subscription service for Lululemon. As an investor, subscription services are a great thing. Less so for a consumer, but when you're investing in a company, a subscription service is always something to look out for because it's a way for them to create reoccurring revenue. And this mirror has a very high price point. I believe it's around $1,500. But the thing is if somebody pays that much for a mirror and then they're paying the $39 a month for this service, you're not going to be very quick to cancel that monthly subscription, considering you just paid $1,500 to have a piece of glass hanging on your wall. So I think that they're going to have a pretty good retention rate when it comes to holding on to these customers that have signed up to use this mirror. And again, too, kind of circling back to that boutique shop setup, if you go to a Lululemon, I absolutely believe that they will have the mirrors in their stores. So while you're looking at, yoga pants or gym shorts or whatever else they sell, you can then also see the mirror and you can try out a workout. Buy your new workout clothes and do a quick workout while you're all in the store and engaging with people who have similar interests with you. So I think this makes a lot of sense for them to have acquired them. They also already owned a few shares of Mirror prior to making this full acquisition, so it's a company they already have experience with. They're able to make this deal happen quickly, and they already know the financials behind it. We don't know how much it costs for them to create these mirror systems, but again, I think that cost of building the mirror is going to be minimal compared to the revenue they'll receive from the subscription service. And I saw these two slides that I wanted to highlight, and I'm looking at my computer here, sorry about that I wanted to highlight from Lululemon's investor relations about this acquisition with Mirror. And there's two things here that really stood out to me. The first one says that Mirror is on track to generate in excess of $100 million in revenue in 2020. And that's a large sum of money. So this is going to be a great source of revenue, especially again, something they have experience with, and being able to have excess of $100 million in revenue and they only paid $500 million for it is a great thing to see. So I believe they got this for a very good deal. So on this other slide, you'll see it says Lululemon can bring significant awareness to Mirror through our marketing and distribution channels, helping them grow and reduce customer acquisition costs. So that's another good thing to see. So Lululemon will be able to leverage their presence and already existing customer base to have people continue with Mirror. And as we all know, even though Lululemon's in a growth stage, one of the best ways to increase your revenue or grow your revenue over time is to reduce costs. So I think this is, again, something that makes a lot of sense, and I was pretty excited to see that. So now let's go ahead and talk about the numbers. And so the company I decided to compare them to is Nike. I could have done so many other companies. Reason why I chose Nike is because they are another US-based company like Lululemon, and I just felt it was a better comparison than choosing something like Peloton. We'll talk about Peloton a little bit later and how I feel these compete, but for today we just compared it to Nike. As we can see, so obviously Lululemon trades at a little bit of a premium. I don't necessarily need to run through all of these, but quickly here, earnings per share is much more substantial with Lululemon than it is with Nike, and the beta's here. So I find this beta really attractive for Lululemon because it's only very slightly more volatile than the market. Nike seems to be less volatile than the market itself, but when I'm looking for a growth company, I want to see stability, but with a little bit of volatility. And I think that's exactly what Lululemon has to offer. It's not a company I see going out of business anytime soon, but it's also not one that I'd want to see personally having major swings in price throughout every day. One of the numbers that stood out to me the most, though, is their revenue growth. So the revenue growth we could see, and this is from year to date. Lululemon's is about 12.51%, and Nike's is negative 4.35%. And this is all from the most recent earnings call. Now, we can't anticipate companies having a decrease in revenue growth given if it's just for that quarter. And reason being is because of people aren't really going out right now and shopping for high-end products. So even during times where people are staying at home, not going to malls, even going to gyms, Lululemon has still been able to increase their revenue. I know they took a little bit of a hit during this first quarter, but again, that's something that's still very impressive for me to see, just assuming the fact that not as many people, I'm sure, have been going to the gym, buying their clothes, or even going into Lululemon stores. We can see here too that the gross profit margin for Lulu is a lot better than Nike. So that just means to me that they're handling their cash a little bit better than Nike. And it's something we can also see in the current ratio. That being said, I think this current ratio is going to go down a little bit for them, so it'll hurt them a little bit, but that's only because of the acquisition of Mirror. They paid cash for it, so it's not something that really interrupted their balance sheet, but I think it will have a very temporary impact on their current ratio. Now, of course I didn't include this here, but the one argument I also do have for Nike in this case over Lululemon is that Nike pays a dividend. Not a huge deal, especially again since I mentioned I'm looking for a growth stock this week instead of a dividend or an income producing one. But if you're somebody that's deciding between these two, bear in mind Nike does pay a dividend. So while I kind of hit hard on Nike right there, it's still a good investment, and if you are looking for something that produces income instead of growth, Nike might be something worth taking a look at. And I'll pop this up on your screen. Feel free to take a look at it at your leisure here. It's a screenshot I just took from Seeking Alpha, and it shows the returns for Lululemon, Nike, Under Armour, and Ulta. I have no idea what Ulta has going on in the athletic business, but I'm not a makeup person, so I might be missing something here. But we can see, if you look at the year-to-date returns between Lululemon and the other three, they're the only one that's been positive. And even looking at the 1 year return, only Nike and Lulu were the only ones that were also positive. They didn't have a negative return, but we could see how much more substantial Lululemon's is. Now, admittedly, I think part of that has to do with Nike being an older company and a little bit more established of a company, so they're not doing as much growing or acquisitions or anything like that. But it's still impressive for me to see just how good of a fight Lululemon puts up against a company like Nike that has such a great reputation. So now we're going to move into the decision time. So is this something that I feel is worth adding to the portfolio? So is Lululemon something that's going to be worth adding to the portfolio? And I'm going to say yes. And I'm actually going to take a screenshot of this here, but part of the reason why I say that is because taking a look at analyst price estimates, we can see that Lululemon's average price estimate is around $321.16, and right now they're trading at $309.81. So there's a lot of room to grow with the average price estimate. Now, that being said, the low is $192, so somebody out there is bearish on Lulu, but again, even the high is $378. So if we can get basically a $70 growth per share, that would be fine with me. As I mentioned earlier too, I don't think this is a company that's going to be going anywhere anytime soon. So it is one that I think is worth adding to the portfolio. Maybe not a significant portion into it, but something worth adding. And if we like the direction it's heading into, then we can always add more shares. But I have to address the elephant in the room. So the very first Watchlist Wednesday I did was for Peloton. And you might think, well, with this recent acquisition of Mirror, wouldn't they go head to head? And you always talk about minimizing overlap in the portfolio. Isn't that exactly what's happening here? And yeah, it is. We do have some overlap between the two of these in the portfolio, Lulu and Peloton. That being said, I think this at-home workout thing is very new, and I don't think it's reached its full potential yet. So this is clearly an area that has room for 2 players in it, if not 3. The other reason why I think it's worth maybe even holding on to both of them is because they don't have the same products. So Peloton doesn't make clothing, and they don't make a mirror that you hang from the wall. Lululemon doesn't make bicycles or treadmills at home. So while they're both high-end, sorry about that, my camera cut off, but as I was saying, there's clearly room for both of these players in this industry. And if maybe one of the, Peloton comes out with a mirror, or if Lulu comes out with a bike, maybe we'll start to see a little bit more overlap. But I really think this at-home workout thing is going to grow in the future. Peloton also recently did a deal with Roku, which I could talk about in a different episode, but I don't think that makes it worth dumping Peloton and buying Lululemon instead. Now, with that said, we do own a significant amount of shares of Peloton, and we've made about $2,000 with that one stock alone. So what I might consider doing, I think we have 100 shares of Peloton right now, is putting in a limit order at around $60 a share for Peloton to sell 25 shares. Again, we've made a lot of money. I don't think it's going to stop anytime soon, but in case it does have a little bit of a drawback there, we can still capitalize on some of that money that we've made. So I will add this to the portfolio, and I will be right back with you. All right, so I'm having some difficulties now. My computer's like cutting off the audio whenever I start. So make this quick. We bought shares of Lululemon. I bought 15 shares at around $309, up a little bit higher than I wanted it to be, but that's okay. Portfolio is up almost $6,400 right now, and Walmart's finally profitable. I'm also going to hold off on selling Peloton shares for right now, or putting in that limit order. We've made a good portion on it, but Yeah, sometimes I like living on the edge, and I think leaving that order there where it is a little risky, but who knows? We'll just hold on to Peloton for now and see where everything heads in. So, with that said, I think that about wraps up today's episode. So, hope you enjoyed this review of Lululemon. As always, please let me know what questions you have in the comments down below, or leave a stock that you'd like for me to take a review of. When I do these, I like to do just one stock at a time so we can do a full in-depth analysis. It gets a little challenging when we do two of them, but if you have two, let me know. That gives me 2 weeks worth of content. So let me know what suggestions you have. If you liked this video, then I always appreciate a thumbs up, but you don't have to. And if you didn't like it at all, then certainly hit it with a thumbs down. Remember to follow the rules of the clock and subscribe if you haven't already. But I guess with that said, I will end it here. So thank you so much for watching this. You could be anywhere in the world and you're right here with me, and I really appreciate that. So I will let you go ahead and enjoy the rest of your day, and I'll see you next time.